All right, hey there. Good afternoon, or I guess good morning right now. Still, everybody, at least over here. It's about a few minutes after 11 a.m. Central Standard Time here on Tuesday, the 5th of October, 2021, in a beautiful Boerne, Texas. Texas Hill Country out here, guys. Hopefully, y'all are doing well, having a good time, paying attention to the markets. You know, if this is the end of this current bull run. As it usually is, you know, when we get to this point in the cycle and this point of the year, there's a lot of money to be made, you know, for Bitcoin here as it rallies up and does its thing. My suggestion, guys, is just to get off the short time frames, zoom out a little bit, because, you know, the pullbacks either going to be shallow and move up, or they're going to be quick and down and back up. And it's going to leave you really itching to you know, if you get out and you kind of miss that next move in, itching to jump in with FOMO, and, you know, there's just large price swings, and you can find yourself in a lot of trouble losing money rather than making money. So you guys need to pay attention to that. Protect yourselves, because, again, like I said, there is a lot of money to be made if it is the end of the cycle and we have the blow off that we normally do. And so you want to be well positioned for that and making your money there, not giving it back to the market, you know, and get done and have nothing to show for it at the end of the day, right? So who's here already? We've got Esteban here. Peter, what's going on? Good to see you guys. Spiral Architect. Claudio is checking in. Nevlusian. Wind is here. River Run, good morning. Good to see you. Data checking in. Boris is here as well. Let's see here. River Run says oil plus oil names are very interesting right now. We'll be curious to hear your thoughts. Yeah, we'll talk about it a little bit. I don't know that I'm necessarily as bullish on oil as most people are at this point. I think it seems like we're likely heading to a top coming in here. But, you know, I've had to change the count a little bit over the last few weeks as we've kind of continued to inch up a little bit. But things are definitely kind of coming to a head, it seems. And, you know, of course, we're getting that whole energy crisis thing. You know, if you look at China, you look what happened over there in the UK. Those of you living in the UK, you know what I'm talking about. You know, and so you've got these issues going on there. And this is all happening, you know, as the stock market has started, you know, pulling back pretty seriously, breaking support, longer term supports there and whatnot. You know, today we've got, you know, we had the DXY rallying, you know, the dollar rallying. We have Bitcoin rallying. We have, you know, again, oil, natural gas rallying. We've got, you know, most things are kind of, you know, pushing up. And so, you know, this doesn't normally happen, you know, when you've got everything kind of pushing up. And so it as I've continued to warn you guys about, when you notice that something's happening that isn't what usually happens, and if you haven't been in the market, you know, for a while, you probably don't notice it. You just think, oh, wow, everything's going up. It's great, you know. But those of us that have been in the market a while, we know this doesn't normally precede good things, you know, when everything kind of rallies there all of a sudden. So, you know, we'll kind of continue to take a look at that as well. Let's see here. Oh, man, that blue on blue. Who is that there? Patrick, what's going on? Good to see you. Hank checking in. I assume Hank is back from holiday. Are you, Hank? Are you back from the beach there? Mauricio, good to see you. Droid, Dr. Droid is here. Mr. Bluebird, what's up? Kimozabi is here. Jorge checking in from Sydney, Australia. Daniel Davis, Devin, Mark. Hey, Trader XO, what's going on, man? Always good to see you checking in when you get a chance, buddy. I know you've been busy over there doing your trading thing and really kind of ramping that up. A lot of good stuff coming from you as always, man. I love to see it. You guys should be following Trader XO if you're not, by the way, on Twitter. Great guy. Really got a lot of good insight on the market. So definitely follow him. Hank, you're still on the island? You changing hotels? Why are you changing hotels? Hey there, Oscar. Tell you right. Good to see you guys. Hey, listen, if you haven't yet, join us at howtotradetowin.com. We'd love to have you there, guys. All this up there is, you know, we've got well over 120 hours of educational video content. We do have 3 weekly live streams for Tier 3 only. We have Wyckoff on Mondays, Tips, Tricks, and Techniques on Wednesdays, and then Elliott Wave on Thursdays. Kind of helping you guys bridge that, you know, the concept and the theory to actual application, because it's easy when we're teaching it to show you guys all these perfect charts where, Elliott wave looks, it's like, oh yeah, that's clearly 5 waves there, or, or Wyckoff says, oh yeah, look at that, that's clearly, accumulation or distribution. It's a lot more difficult at first to put it into practice, because most of the things aren't quite that easy. So we seek to help you guys apply that better. I go through a whole explanation. We look at current charts, go through whole explanations of why or why not I'm labeling things as I am, just to kind of give you guys all that there. And then, of course, Tier 3, this is Tier 3, man. It's got all the everything. Chart requests, chart critiques, all that kind of stuff. We got weekly crypto indexes that we update. We have bonds that we update twice a week. So a lot of stuff going on there. We'd love to have you there, guys. As a matter of fact, I just had a comment from somebody who just joined us a couple of days back. What did they say here? And this is usually the kind of response that we get, guys. He says, even though I've just been in for 2 days in this group, I just want to say it's insane. It is absolutely brilliant. Incredible amount of educational, awesome content. So many intraday updates, chart requests, and the people, they are fantastic. I love it when people say that, because I agree. We've got an amazing group of traders in here, guys. He says, willing to help, and they are so kind. And moreover, the fact that I encourage y'all to be kind, act positively, stay humble, be patient, be patient, be better human beings. Honestly, it's just great. So, I mean, yeah, I'm going to post that later on Twitter with their name and everything redacted, because that was a private message to me. But I just want people to see, because, this is especially now that the market's going up, everybody's an expert, right? And so as the market runs up like this, nobody thinks they need help. Everybody thinks, oh, I can just follow these yahoos online who are giving me all these targets and whatever. But, again, as you get toward the end there, the money is easy to make. It's harder to keep, especially when the market actually reverses. And my intent is always to teach you guys how to trade, to understand why the market's moving like it does, to understand the importance of risk management and how to apply it properly. Those are the things that are going to make a difference at the end of the day, guys. You are not going to be rich. You're not going to get rich and stay rich following somebody else telling you where to buy or sell. I don't care who they are. You're only going to do it by learning how to trade yourself. And I know that's, some of y'all go, I don't have time to do that, or I don't want to do that, or it's too tough. It's not, guys. It's really not. It just, like any other skill set, you have to learn it properly, and then you have to practice it properly. And as long as you're doing that, you should be just fine. So anyway, we'd love to see you guys join in with us, okay? I tell you right, it says, if everyone is an expert, then experts say will be devalued. Yeah, but it is what it is. When the market's rising, it's hard to not make money. And so, it just basically everybody, here's a chart. It's going to go up to here. Well, yeah, of course it's going to go up there. The market's all rallying, euphorically. Everything's pretty much going up. So the problem is everybody gets caught. They either still FOMO in toward the tops, and then it drops real harsh back and it knocks them right out. Or, they make money on the way up and then they lose it trying to continue because they're just not understanding that the top's in. And then, they'll continue to lose money trying to long it, looking for those new all-time highs. No risk management, all that kind of fun stuff. So you guys don't want to find yourself in that situation. Diversity is the spice of life, Hank says. Want to see all the nice hotels 1 week in each? I've never heard of that. I don't know, man. I haven't been on vacation a long time, though. But when I do, I usually just stay in one place. Maybe I'll try that sometime. But, man, that's just like moving in the middle of your vacation. Who wants to do that? Anyway, all right. Hey, what's going on, Mahdi? Good to see you. I've got the bag. Good to see you checking in. All right, guys. So anyway, yeah, join us over here at howtotradetowin.com. We'd love to have you. By the way, if you haven't subscribed yet to the market breakdown, be sure to do that. I noticed I got a report here from them. We get them every week, every time we send out our review, the company that I use for the newsletter. Let me kind of get this pulled up over here. They kind of let us know how many actually get delivered and whatnot. And apparently only about 87.78% of the newsletters were actually delivered. Just understand, guys, if it's not getting delivered to you, that's because of your email provider. And so, they just sometimes, depending on the domain it's coming from or whatever kind of thing that they've got going on, they won't allow it to come through to you, I guess is what I'm trying to say. And so if you haven't done that, you can join, or you can come to my to the Twitter page there, and there's the link on there to the newsletter in case you didn't get it. But if you're not signed up, most everybody gets it. Last week we had 100% delivery, which was pretty great. But you can go ahead and click on that link I just put in there, and that'll get you then set up with it. My brain is everywhere this morning, guys. You have to forgive me. I am long USD CAD this morning from 1.25707. So, yeah, that means I'm up about just about 3 pips right now or so. But we'll see if that bottoms in. It looks like on the 3-minute, it looks like we may have a little head and shoulders, inverse head and shoulders thing going on, but that's the 3-minute. Hey, Brian Riley, good to see you, man. LXT's checking in. XRP Bandit, you're in South Africa? Man, glad to have you checking in, man. I didn't know you were from there. Good. That's awesome, man. Let me see here. Hank says he's a global nomad. Once did a round-the-world trip in 16 days. Oh, yeah. No, I love traveling, too. It's just I've spent my entire life moving around. If I go on vacation, I don't want to move around during vacation. Droid Doctor says, I'm doing very nice work with the newsletter and all the educational videos. I appreciate that. Thank you. By the way, hey, listen, if you are tier 3, man, I told you guys we got more and more stuff coming up. So if you are tier 3, one thing I'm gonna start adding in there are if you trade stocks, my list of likely likely good short trades. Short squeezes. So just companies that are set up to be squeezed by a short squeeze. And so that might be able to help you out some there. I think I'm going to add maybe one every week with the newsletter as well. So you got another reason to get a hold of that newsletter, guys. But yeah, if you do trade stocks, you're in tier 3. I'm going to give you a list of, and keep it updated, of companies that are at the top of the short squeeze list. So it gives you another opportunity to potentially see some opening in there coming up. So yeah. Rancam, what's up, buddy? Yeah, I haven't seen you in a while. He says, been in tier 3 for a long time. Definitely would suggest. Always great to see you, man. So here's what's going on with Bitcoin, guys. We had a lot of this overlapping here, and it's just kind of, when you have a lot of overlap here, it gives you a lot of possibilities. And so last night for the BMA evening video update for our members, I discussed, a multitude of possibilities that could happen here, depending on if it broke down below the swing low here or if it broke out above the swing high. As you can see, it did break up. So that eliminated all these other ones to the downside. But nonetheless, the big picture is we should continue higher, guys. Remember, this big thing, let me see here. Where is my correct chart here? Oh, man, do I not have it? Let me zoom out here. Let me see. Here it is. This is the one. I just didn't have the right time frame there. The big picture, guys, if you were in the newsletter, if you've got the newsletter, you've seen me mention this before. The big picture is that we are 1, 2, 3 waves down. We broke out above that second wave. And so doing that locks this in as 3 waves down. And so 3 waves is corrective, which means we should be heading higher. Again, among the other areas here, again, we pulled back to previous resistance, used it as support here, rallied up. We had heavy volume coming in at the bottom here, the volume's almost the same, but we had no follow through, which tells you the market is very bullish in this area right here. And so, takes on up, right? People look at this and go, oh, look, the volume's dropping off, so it's not, it's not any good or whatever. No. All it means is it doesn't take that much volume to push price up. The supply has rescinded, has dropped back. The supply was strong in here, and again in here. When they tried to continue push it down here, and it went up instead of going down, Supply just pulled back. Your big traders just pulled back. There's no reason to continue to throw supply in there. The market is clearly bullish in this area. And this is what you guys need to understand. There's a lot of nonsense that goes out there where people are saying, hey, listen, what about the whales, man? They're just going to push it down whenever they want. They're going to take my money from me. No, they're not. Because stuff like this, if you can be the whale all you want, but if you're selling into such strength at the lows, you're an idiot. If you continue to do it. If you're trying to trade, guys, the key is to understand what is the market feeling. And the market's telling you right here, all this supply comes in, you get it here, and it pushes up and it continues down lower. They're like, okay, supply comes in again. And look at this. If we look locally here, look at these two candles. This first candle is the drop here. The second bit of volume, almost the same as the first, has completely reversed it. Bullish engulfing, taken back up. It comes back down a few times on lower volume. It says there's lack of interest in selling down there. Price rallies back up. We break out of the descending channel resistance, bull flag basically. We're heading up, guys. So again, right now locally we've got this 55,430 target. Up here we've got 79,440. And of course, if we're making it up there, we should be heading higher as it does. But so that's kind of where we're at the moment. That's the big picture. Let me see here. Brian says, if this Facebook story bleeds into other high-tech giants, NASDAQ goes down and S&P and crypto. Yeah, so the Facebook story basically, I haven't been able to read the whole thing, but from what I understand, and correct me if I'm wrong, Brian, it's just that that basically Facebook is taking money and creating strife instead of removing hatred, basically increasing it, making it more visible. Because that keeps, and from their point, it would be because it keeps people on the site. Remember, if you're running a social media site, guys, what you want to do is you want to keep people in your site. And you do that by giving them something to keep interested in, right? Give them something to, whether it's good, bad, or otherwise, something to get them to argue about or talk about or, wax philosophically on, right? And so, I don't think that that's necessarily what takes everything down. I mean, I think that things are generally not looking too good. If we jump out here to the Qs, or the cubes here, look at this. We've got this support here from back in the May of this year. We've broken down through that. Not only did we break down through it, we broke down through it on high volume, and we gapped down. We rallied back up, rejected, continued down. This is one of the charts I put in the newsletter as well. So, I mean, and you look at the cubes as kind of your technology sector bellwether. Basically, it kind of says this is how the technology sector is doing. It's not looking too good at the moment here. If I look at this, I say, okay, I think we've probably got a, let me see here. We could, depending on my counter here, we could have maybe a 1, 2, 3, 4, 5. So a 1, 2, 3, 4, 5 maybe. Or even a 1, 2, and then 1, 2, 3, 4, 5. May give us a 3, 4, come back down. The key is going to be right now, well, really, if you break out across the top here, of course, that invalidates it, right? Locally, if you get an impulsive breakout above the pivot, that's a warning that maybe the bottom might be in. We might be going to a new higher high, a new all-time high. Breaking out above this R1 pivot here on the daily is going to add confidence to that idea that maybe the bottom's in here and we're heading up to a new all-time high. But, again, you just want to kind of watch and see what's going on here. If we zoom on down a little bit here to the 4-hour, you can see how we've got this movie, this large drop down, and then boom, this little rally back up here, right? See, I kind of look at this and I say, okay, 1, 2, 3, 4, and then 1, 2, 3, 4, 5. That's kind of my count right now. It's 5 down. We're done here. And if so, the 61.8's at that R1 pivot on the 4-hour here. 38.2's right there around the pivot on the 4-hour. If we keep on zooming on down there to the 1-hour, you can see the 1-hour is rallied up here. You can see there was bullish divergence twice in a row here. So as you got it here, boom, boom, there, comes back up. But again, we're already topped out over here and overbought with Stochk RSI. So we'll see if we don't get further downside off that. right here, it looks like we're just an ABC right now. 1, 2, 3 waves. So we'll see, do we get a pullback, another wave up? That would give us 5, in which case we look for 3 back and at least 5 more up. And in that case, we might be heading up here toward 61.8 or heck, even the 78.6 up here at 375. But it has to break out of this top here. Until it does that, I think right now it's screaming further down for now. So we'll continue to see how that goes. If we get a breakdown below here, if we get like 3 up and then a breakdown below, again, that's going to suggest that maybe we've got a 1, 2 here and we've got a 3 coming in. My targets here, based on that, potential local target right here around the EQ of this blue demand structure here. So right around that 327, 328 area. And then a secondary target, a larger count target down here around the purple EQ at about 302 or so. So that's what I'll be looking for if we get this rejection and continues down below the swing there. So 23 next or what? I don't, for what, Bitcoin? No, I don't think we got 23 coming in. Why would we have 23 coming in? Again, this is 3 down, so this is corrective. So we should, based on this here, expect to be rallying up through that. Now, obviously anything can happen, until it actually breaks out above the top here, that kind of guarantees that we're headed up. At that point, we're up, right? But, again, if we've got 3 down and we're breaking up above that second wave, this should be corrective, so we should be heading up. Yeah. Oh, you were talking to Hank about his chart. Oh, okay. I didn't see. Does Hank have a chart? Oh, Hank's got a chart. Should we humor him? Should we watch? Of course we should. We're here to look at him, right, guys? We're not scared, right? Let's see what Hank's got here. Hank's looking at this possible lower low. I mean, I think this is what some other people are looking at as well. You've got to get 3 out of this, which becomes difficult. I think this is better as 5 when we try to count this. I went over this not too long ago. I think this, trying to count this out as 3 up, I think it just fits better as a 5, but I mean, it could still be a 3. But my issue then is this 3 right here. This is 3 down. We've broken up above that too. So I don't know. It seems like it would have to go up higher. Unless this is somehow 5, but I don't see how we get 5 out of this right here. I mean, again, it looks pretty clear. 1, 2, 3 down here. Let's see here. And then we look at A, B, C. And so wave C almost hits the 100%. So it almost hits, that the equality with wave A there. See, the problem is with these 3 down here and us breaking up above 2, you can't subdivide any further. You can't make this happen any further here. Could you maybe? I mean, I always got to look then, okay, maybe we get a 1 and then we got a flat here maybe, right? So ABC, ABC, and then 1, 2, 3, 4, 5. But this has to be an ABC right here then. And so the question is, can we get an ABC out of that? Does that make sense? Maybe. I'm not sure on that count that we can get an ABC out of that. I mean, you can probably finagle a little bit and get something. But it does seem clearer as 5 down here. Let me see if I've got it on my other. Oh, I don't think I have it on my other one. Let me see. It's this right here, right? Oh, I do have it here. Okay. So this is my count coming down here. So for this A, B, and a C here, I've got 5 waves coming down here. I mean, counting it down pretty low in the time frames here. I don't know, but you would have to. I think if that were to happen, this has to be a 1. This would have to be an ABC. This would have to be an ABC. And this have to be, 5 up going here. Because, again, you've broken up above that second wave. This is 3 waves. You've broken above that second, which means it can't subdivide any further. So I don't know. Again, when you're digging, this is already pretty low here. This count here is off the 15-minute chart, and it fits extremely well as a 5. But again, when you're zooming in that low, it's possible that you could misinterpret it. 3. But again, if we're breaking out above here, obviously, above this swing high up here at around 52.855 or so, up there, that'll definitely lock that in as 3. But I don't know. Like I said, zooming into the 15-minute, this fits as a 5, much more than it fits as a 3 or as an ABC. My bias continues to be that we're doing this thing here until it shows that it isn't anymore, right? It wouldn't be a WXY and then a 5 if this was to be a flat correction. It should be 5, 3, 5. Oh, I'm sorry. It should be 5, 3, 3. You're saying 3, 3? Yeah, no. It should be an ABC if it's going to be a corrective move here. With a flat, it shouldn't be a WXY. It should be an ABC. So 5, 3, 5. Yeah. What's going on, Diego? Good to see you. Let me see here. Droid Doctor says most people are not yet talking about a market crash yet. Bitcoin doing fine now. Bitcoin is likely to crash. Everybody else says we're in a stock market. Yeah. Again, if the stock market crashes, it's because the overall economy is not that great. And so in that situation, people tend to run to safety, which is the dollar. And that tends to make everything else kind of follow along. So, Bitcoin won't crash because the stock market crashes. Rather, they'll both crash because of the overall economic climate. Because the economy's dying off, rolling off a cliff or whatever. And everybody's kind of running to the dollar for safety. Yeah, I mean, that's why it would be. It's not that the Bitcoin moves because, the stock market moves. They both move because of what's going on, in the economy and whatnot with all that. So, yeah. Do I ever look at ARK as an indicator for the tech market? Not usually. You can, I guess. But I don't normally look at it as a bellwether or anything like that. We can pop it up right now, though. Let me see here. Let me find a good chart here to use. Let's see here. Load. I don't think I have it. Oh, no, it's 2Ks, isn't it? Yeah. Oh, I do have something. Guys, this was from way back in March. I haven't looked at it since then, really. See, back here in March, I was looking at this as being 3 and potentially 4 here. This is going sideways here right now. Let me see. Let me go ahead and make this a new chart here real quick so I don't mess with this one. So that's the one thing, guys. You won't see me kind of deleting charts and whatever and changing charts. When I do something new, I'll usually put it on a new chart. And that way everybody's always got, nobody ever say, oh, look, you're just, you're lying about your charts, whatever. No. They're all right there. It's all legit. It's all right there for you to see. Based on this movement, I mean, 1, 2, 3, 4, 5. Potentially a triangle here. A, B, C, D, E, and 5 down. I mean, so if we look at that, I mean, this could potentially be done here as an ABC. So A, B, C here. Again, with the idea that maybe, well, you know what, before I do, let me make sure that this looks lower. Let me see. 130.28. We got 130.80. Yeah, so, you know, again, A, B, C, D, E. So, bit of a triangle going on there. And that would give us a C. And then we have to look at this and go, okay, well, if that's if this is an ABC, again, because we're let me see here. 1, 2, 3, 4. So, all right. So the other way we can look at this, 1, 2, 3, 4, 5 gives us 1, 2. I'll check this out in a minute here, make sure that it fits if it does. So we could have this as a 1, this is a 2, this is a 3, this is a 4. A triangle is a 4 and then a 5. And all we'd have to do is make sure that wave 3 is not the shortest here, which it does not look to be. Yeah, but it's already longer than wave 5 here. So let me go and change the color on that so we can see that other count there. But yeah, you see this 1, 2, 3, 4, 5 here? That could give us a 1 and a 2. Again, this gives us a 3 here instead of an A. And then we have 4 as a triangle instead of B as a triangle. And then we have, again, our 5 down here for C. Or 5. In either case here, let me see. Come on there, let's go here. So that rally off that was just the 61%. It hit the 61.8% rally here. So you can get potentially an ABC out of that. But this hasn't been overly impulsive to the downside yet. You've got, looks like 1, 2, 3, 4, 5 down right here. So it looks like there's a first wave down. Let's see, 126.32, 126.25. So here's the swing high here. I mean, so, you know, it could be, you could have 5 up on that potentially, or 1, 2, 3, 4, 1, 2, 3, 4, 5 maybe. And then this pullback here, you have your 5, and then you have ABC, ABC, and then 1, 2, 3, 4, 5. So maybe a flat correction here. And you have 1, 2, 3, 4, 1, 2, 3, 4, 5. So this could be an A, a B, and a C. What we can notice is we do have volume kind of showing up here as it's pushing down. You see how you've got this volume continuing to expand as it's coming down here. Your candle spreads are staying large, which shows this presence of supply continuing to push down on the market there. And you don't want to generally see that if you're looking to be bullish. You want to see supply start at the top and let the market take it down, or not take it down. You know, just let it kind of fall a little bit. And you know, there's more. The market isn't jumping in and adding more supply. In this case right here, you know, you have very little up here, but as it goes down, you have more and more supply coming down on the market as you're getting lower down there. And that isn't usually what you want to see. And it doesn't mean that necessarily the price has to continue lower, but it means that if it's going to be bullish, price necessarily has to overcome that. Kind of what I was talking about back here on the Bitcoin chart. How we've got this strong bit of volume. Whoops, let me get this right here. How we had this strong bit of volume coming at that first drop, and then again at the second drop. And then you see the volume still there, but price doesn't go any further. It kind of sops it up and continues up. That's kind of what you would have to see in here for that. Obviously, let me see here. If we're breaking down below this swing low here at 97.22, that should indicate that, that this is probably the top up here. And if it is, I think here we can maybe count this maybe a 1, 2, 3, 4, and then a 1, 2, 3, 4, 5. So we could get 5 out of this here, which is what we're doing for this 3. But is there any way we can make that 3 maybe shorter, give this a 5 up here? I mean, so I guess if we look at that, we could do maybe like a 1, 2, 3, 4, 5 here. And so that would be 3. This small pullback could be 4. And then we'd have this 5 up here, 1, 2, 3, 4, 5 as your 5. But that's going to take a breakdown below this swing low over here to kind of get that going. Below that, what is that, 97.22 right here. Until that point, you can, again, we can look here and we can probably get 5 up, and then, like I said, an A, B as a flat correction, and then a C here. That would mean so far that pullback has been right there about 70.5%. And I like that. That's a good institutional pullback right there. By the way, you can note if you look here, you can see why it's getting support right in that area. Go right here. See that? Resistance, support, resistance, support, support. So it's good area of support or resistance. So, I mean, I think, honestly, if you're looking for larger term, what's potentially going on as far as these go, you kind of just watch this range right here, I think. And so if you break out through the top here, that increases the odds that we're probably going to make this still this wave 5 up higher. But if you break down below that swing low at the bottom of that blue range, I think that means that that 5, top may already be in there, and we're heading down lower there. And if we are doing that, of course, that coincides with what's going on with the cubes here. If that breaks down there and continues lower as well. Looking at Amazon, I'm not overly excited about Amazon. It's been in this range since August of last year. And we can notice that volume is continuing to spike all the way through this so far. So I think we may be having basically this up thrust after distribution here, ellipse here, and we'll look for some follow through to the downside. Right here we've got a 1, 2, 3, 4, 5. So, a little rally up and then continue to break down. And what we should see, if this is correct, is we should see volume continuing to get larger here, continuing to expand, and these candle spreads continue to get larger as it breaks down. The idea being that maybe it goes up here and then it comes down, it breaks down, it retests, and then it hits here. And so then you get this markdown over in this area here. This kind of says the top. If Amazon's topping out, likely, the market's probably topped. So I'm really interested in this. I don't like the fact that you've got all this volume spiking throughout the range. This right here is usually indicative of distribution. You can also note that you're getting spikes of volume here, really just at the tops. These are where your largest spikes are coming, or at the top here. Here, up here on the breakdown. And so, what that's telling you is you've got more and more supply coming in as demand keeps pushing it up. So you've got these guys that have these big things of supply, right? There's these big pockets of supply. And they're just kind of put in the market, and the market's trying to push up here, and they're like, well, shoot, you want to buy more? I'll sell you more. This is the whole idea that the market buys the top, right? And so if we're dropping back down below this swing low here, again, we got a 1, 2, 3, 4, 5. It looks like we got an ABC potentially here. So might we have this here? Again, the other thought, maybe it's dipped down just below this swing low here. So maybe we've got 5 down, and then maybe we've got a correction going on here. See, we still got 5 down, though. That's the thing. You could say maybe a 1 and then an ABC, ABC, and then 1, 2, 3, 4, 5. Gives us a flat correction there. And so in that case, we'd have 1 down and then A, this would be B, and then we'd have C up a little bit higher. At that point, we'll have to kind of push it a bit to see that. But, potentially, we've got a little bit of bullish divergence right here, resulting in the current rise, the current rally. Stochc RSI bottomed out over here, almost bottomed out right there and oversold, crossing bullishly, trying to kick back up. This is on the daily. So I could see this continuing up here for a bit, at least as a corrective move. But I think if we're breaking out above this swing high up here, then this would be potentially A, and then we have a flat correction for B, and then we'll have C come up just a bit here, and that would be the Lipsy. Last point of supply, and then we'd have that rally back, or that drop back down. But right now, the way the volume is acting in this range so far is quite distributive. Distributive. Anyway, and like I said, with growing volume at the highs, so more and more supply coming in at those highs, because the market's saying, hey, we want to buy. We're overly crazy about it, euphoric, whatever. So yeah, if this is reaccumulation, what you want to see is volume dying off like this. You want to see volume dying off like this, but you don't. You have all these continued spikes out here, and like I said, they're actually increasing. And they're coming at the tops. They're not coming at the bottoms. The spikes of volume are not, demand showing up all of a sudden at the bottom, so you have a little bit here. But even that's much less than what you have at the tops. Stop listening to people that are trying to do Wyckoff or trying to show you some kind of Wyckoff labeling without any volume on the chart, guys, or without any discussion of volume. That is not how it's done. Don't say, oh, well, you just don't know or whatever. Come on, guys. Let's be real. Wyckoff is the study of price action and volume. It's that understanding of that price action and volume, okay? It's not the understanding of price action. So, yeah, stop listening to people that are doing that, okay? Chum in the water, what's up, man? Good to see you. Andy, good to see you showing up. Let me see. Let me catch up with you guys. Telluride says ARK should have some correlation to Bitcoin as well. Yeah, good times, right? That whole tech thing. Now, make no mistake, guys. Kathy Wood over there at ARK believes that deflation's coming. She believes it's going to be a product of technology advancement, though, which is a different type of deflation. But we don't have a whole lot of time to go into all that here. Maybe I'll break that out in one of these newsletters. I'll discuss what she's talking about versus, really what I'm talking about. But nonetheless, it's been argued for a long time that technology is going to create deflation because of its ability to do what it does with much less, right? And so we'll see how that plays out. Oh, man, I'm going to totally mess up your name, so I'm going to apologize in advance. Is A like the first initial and then Podolsky its own thing there? Hopefully I got that right. Hank, you like that Amazon chart? Yeah, man. Again, this is... by the way, guys, this is what we do on Wyckoff on Mondays with Tier 3. This is from yesterday. This is what I did with the session with our members. And I went through and labeled the whole thing, explained why and the volume, everything. I went well beyond what I'm saying here, kind of explaining why it might be and how, as it was developing, you might think it's one thing and then it becomes another based on what's going on with that price action and volume. So if that sort of thing interests you, man, there you go, right? Give you some macro stuff, LXT. Everything eventually goes down and then eventually goes back up and then eventually goes back down again. There's the macro stuff. All right, Adam. Well, good to see you, buddy. Thank you for checking in, man. Let me see here. Let's see. What else is going on here? Hank says his risk appetite is low. Yeah, mine isn't so high either. Again, guys, you have to be careful when you first, especially you have to be realistic with yourself. Most traders come into the market and they're not realistic with why they're in the market. Most of y'all came into the market at some top, and you came in because everybody, it seemed like, around you was getting rich and you weren't, right? You kind of stumbled across it. Everybody's telling about how easy it is. They made all this money, right? And for most people, that's why they end up getting into the market. But then they're not honest with themselves about that. And you need to be, because what happens is if that's why you're coming in the market, you tend to be overly risky. You tend to take chances that you shouldn't be taking. Because again, you're coming in, you don't know what you're doing, but just in human nature, when you become very emotional about something, risk reward goes out the window, right? No matter what it is, whether it's markets or anything else, you just kind of go headlong into it, right? Very few of us get excited emotionally and then step back and are logical about it and take care of our risk management, right? And that's why, most people, well over 90%, are out, again, in the first 3 months of coming into the market. Worse than that are the people that remain in and continue to give it money. I was one of those people at first, guys. My first 3-5 years or so. Yeah. Until I finally woke up one day and said, I can't keep, feeding this market. I gotta figure out what the heck's going on. I gotta become a student of what's going on here. So that I'm not continuing to do this nonsense that I'm doing right now. Most traders, unfortunately, never get to that point. I hope if you're here that you do. I really do. And you go, oh, well, you talk to all these people every day. If everybody does good, then you're not going to be able to make any money. You know what, guys? Human nature, most people are going to completely ignore what I just said. They're not going to try and do it. Maybe many of y'all kind of ignoring it, kind of, whatever. He doesn't know what he's talking about, blah, blah, blah. That's the way most people are. And so most people are not going to take advantage of the information that's given to them. The wake-up calls, the realizations, these explanations of what's going on. So you don't ever have to worry about it, guys. People like me have been out here trying to help other people trade successfully for over 100 years, guys, and nothing's changed. People are always going to be people. Always going to be the same bit of people. Not good, bad, or otherwise. They're just who they are, generally. So, if I can talk to 1,000 people, maybe 10 will listen, will actually really listen and be serious about it. I don't even know that it's even going to be that high. Maybe it spikes every once in a while a little bit higher, but it's a very low percentage of people that listen in that actually take it to heart. So don't ever worry that, oh my gosh, somebody's out there giving away all the secrets and everybody's going to be becoming rich now, or if everybody knows, nobody can become rich. Human beings aren't the type to generally, buy in on it. Lewis Winthorpe, what's up, man? Yeah, man. Yeah, you're one of those ones. At the beginning of the show here, I mentioned that I got a report from Review, and they said basically just under 88% were delivered. And when they say that, what they mean is if something's undeliverable, it means that you're for whatever reason, your email provider is blocking it from coming in. And it's nothing. There's absolutely nothing I can actually do about their Review can do. We can't force your email provider to allow it to come in. And so that kind of fluctuates depending on, Review is a company that sends out, these emails, these newsletters and whatnot. And so if you're one of those jerks out there who request something and then you, and I'm not talking about you specifically, I'm just saying some people, they'll request something and then instead of just canceling it, they'll mark it as spam. They'll tell their email provider that it's spam. And so what that does is that goes toward the central repository here as far as emails go. And then if you get enough of that, it puts your domain on a blacklist. And then the email servers automatically won't deliver anything coming from that blacklist. It's a big, huge thing, guys. Most of the time, it isn't even your fault. It's somebody else's or a group of somebody else's faults out there. But yeah, if you didn't receive it, definitely use the link to check it out. Maybe next week it'll be back in. I don't know. Trying to figure it out, guys. Like I said, unfortunately, with the whole delivery thing, there's that is completely onto your email provider, unfortunately, and whatever they're deciding at that time. So yeah. Venture, 1.5 years in, still trading water. Well, like I said, if it makes you feel any better, I was in for about almost 5 years losing money pretty consistently. I'd lose it, and then I'd get to that point where all of a sudden I made a good trade. I was lucky, and it would erase my thoughts about all the losses I've made, and it would keep me in the market. That happens to a lot of people. But it's like I said, one day I finally woke up and said, man, I got to figure out what the heck's going on here because this is ridiculous. Can't keep putting money in here. And that's what I've been doing ever since. And it was a change. It was a turnaround, guys. It was a true change. But, it has to come from up here. It has to come from you, from your heart, from your head. It has to. It cannot come from anybody else. Only you can make that click, that change, that realization that you're not doing what you should be doing to be successful. So what I do with TWC, guys, if you don't know, is everything that I do there is based on, okay, when I first came in, my first few years, these were all the mistakes I made. This is what I'm going to try and help my members keep from doing, because I still remember I was still there, and my goal is to keep them from doing it. Or if they're going to do it, to help try and convince them eventually to pay attention and to do the things they need to do not to make those mistakes. And then beyond that, to help them learn how to use everything, indicators, trading styles and whatever, correctly. Again, guys, you'll see people out there go, oh, Elliott Wave doesn't work, blah, blah, blah. Well, yeah, sure it does. Wyckoff doesn't work. Sure it does. The people that say that generally, first, never learned how to do it properly. Two, never practiced it for any extended period of time. And so with those two things in their head, it was like, oh, they read something online. They tried it for a day. It didn't work. Oh, it doesn't work. That's human nature. Not just in the market, but with anything, guys. We don't tend to put a whole lot of effort into things. But therein is a difference between why you're not the professional doing that thing. Professional, guitarist or drummer, professional artist, professional, sports player of some sort, baseball, soccer, hockey, basketball, whatever. Because you don't have that follow through. You're not, well, you have it, you can do it, you just choose not to. And then that's just the way it is, with everything. So, trading is no different, guys. You got to have that follow through, okay? Let me see here. What's going on, Kyle? You saying, in case of Hank's chart for this to be a massive B, probably just completed the first part of an A zigzag and doing a B down. And now we're going up for C. Let's see here. So how would you do that? I mean, you're going to have 5 down here then, right? Oh, no, you're saying this is B. Let me zoom out a little bit. So you're saying this is A, this is B, and this is C. But C shouldn't go, or were you saying C is around, 61, so you're saying it stays below. Now, see, my general thought on that is if you're getting that close, if you're getting up above 90%, retracement of wave A, then if it's going to be a corrective, it should be a flat. Generally, your zigzags won't reach up to 90%. And so if this gets up here to 61, 90%'s just a bit higher at 56, 660. So if you're going up to 61, you're well over 90%, which again means that generally it's going to be an ABC. ABC down, ABC up, and then 5 down as a flat correction. I'm not saying it can't be a zigzag up that high, but again, especially when we're doing Elliott Wave, we look at what usually happens as our first thought, as our initial and our primary thought. And so if I see it jumping up above, kind of this 56, 660 kind of area, to me, it makes more sense that it's impulsive and working up. Again, I'm not saying it has to necessarily, that it's guaranteed. I'm just saying that most of the time, if you're making above 90% and it's corrective, it's going to be a flat rather than a zigzag. That's all. Oh my gosh. Let me see here. Oh, these people coming in here with this stuff. Who's slacking here? Who's not blocking these people? Oh my gosh. Listen, guys, if you are the type of people to go in there and jump on these people here that come in and say, oh, Mr. So-and-so was absolutely fantastic or whatever, I don't like to say you deserve what you get, but man, oh man, they're completely preying on you guys They know what you want to hear and what what it is and whatnot. Man, oh man, stay away from that nonsense. In the case of who was just here, you'll notice that their name, their username at the top, they said text blah 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 at whatever it was. Whatever that other what is it called? Starts with a T. Anyway. Well, no, that one came in and showed up. If it shows up in there, then, it's because they didn't get blocked. I blocked them and never removed them out. I blocked them off the whole thing, so maybe they came in on the other one. Maybe one came in on Twitch and the other came on YouTube. It's the exact same thing, just a different picture. Yeah. But anyway, yeah, whatever. Telegram, that's what it is. Guys, stop following people on Telegram. Stop getting involved in all that. I say this because I've had people the last few weeks, more than a few people actually get a hold of me and say, hey, listen, I lost money with so-and-so. They took my money. And I said, well, why'd you give it to them? They said, well, they say on there, they said so-and-so was this great person. I could get them on WhatsApp or get them on Telegram, and they were going to make this money for me, and all they wanted was a percentage of it. Guys, stop. Don't put yourself in that situation. They're preying on you. Don't allow them to do that, okay? Yeah, learn how to do this, guys. It's simple. It's not easy because you have to get through all your emotion and everything, but you can do it. And once you learn how to do it, it's one of the greatest skills you can have, guys. As long as there's financial markets. But more than that, it helps you understand people. If you really learn, these things that I teach about the markets and how they're working and whatnot, it really teaches you people, which that helps you in anything you do, right? So, yeah. Thor. Let me see here. Well, Merv, you'd be amazed at Hank. Hank used to always have Elliott wave charts a few years back, and I didn't. And I didn't because it takes more time and effort to do it. And so I didn't do it publicly a whole lot back in the day. And then, people continue to ask and ask and ask. And, with what I do, it's like, okay, we give the people what they want. So that's why we've added it in there. But Hank used to always have Elliott wave charts a few years back. Always. It's like we flipped now. Good times, right? Let me see here. Yeah, John Bollinger's awesome. If you guys aren't following him, if you don't know who he is, he's the creator of Bollinger Bands. And basically, it's just a moving average with 2 standard deviations above and 2 standard deviations below. The idea being that price kind of reverts to the mean. Price can, hit an outlier of around 2 deviations. And most of the time when it does that, it returns back toward that mid-range, which is that moving average. It's been great stuff, guys. There's a lot to know with Bollinger Bands. We just did a thing on that last week, part 1 of Bollinger Bands for our tips, tricks, and techniques segment on Wednesdays for Tier 3 members. We're going to do part 2 tomorrow about Bollinger Bands, about how they are, how to use them, stuff like that. So, yeah. Let me see here. Kyle says either way, indicators are upside in his book. Yeah. Indicators are looking pretty bullish. Things are looking pretty strong at the moment. Price action volume looks pretty legit. Still so far. So we just want to see it continuing up here. And as it does, well, look, locally, we've got some targets along the way here. If this is a 1-2 right here, then that gives us a wave 3. So a sub-wave 3 of 5 up here at 52,707. So right now, my working hypothesis right now is that this is a 1-2. And then we're working on wave 3, which should potentially target up here at around 52,707. And if we get a rejection there, normal wave 4 pullback, that gives us the minimum wave 5 up here around that 53,610 kind of area, which is just parentheses wave 3. So again, this is 1, 2, 3. We'll get a 4 and a 5, which will give us then a 1, 2, 3, 4, 5, which will then get us this 1, 2, 3, 4, 5 up there. So, kind of putting up there. But even if you're not into that, again, we've got this this descending channel here. And so the pattern target based on the height of that channel is this one right here at 54,656. So there's that pattern target. We're just about to hit this red wedge pattern target, which we've had in here since before the breakout. And that one's right there around 51,066, $51,066. So we hit that one. That'll take that one out. And then we've got the channel target up there. If you're not into the Elliott wave thing, you can look at those pattern targets, guys. Okay? Let me kind of catch with you. Exit busted. He says, I've devolved back to price action and volume, simple SR levels, preferably horizontal, much simpler and more effective for range positional trading. Yeah, I hope I was a I hope I was a catalyst for that, because back then I used to do Wyckoff all the times, right? And of course everybody, argued and said, oh, no, it's not, no, it's not. And then everything turns out to be what it was. Good times, right? A lot of things, man. A lot of things over the last few years. It's been a great ride. I appreciate you guys checking in all the time, still being a part of this. Mark, that's right. It's part of a tool belt. Trading is no different than an electrician who uses many tools to fix a light socket. That's right. That is right, guys. Let me see here. So we've got Bitcoin there. If we're looking at the dollar right now, guys. So here's what I put in the newsletter this week. And this is kind of like just kind of big picture. Take Elliott wave, everything else out of it. We've got this ascending channel here, which we broke out of on high volume, large candle spread. We're pulling back into it. So we've got this green range between that channel resistance and the daily pivot. And so if we can get a rally back out of that green zone, that'll say, okay, we're bullish. We're most likely pretty bullish here. According, with Elliott wave, or even if you're not using Elliott wave, what you're looking for is a breakout above this last major interior swing high here, which is 94,795. This right here isn't the DXY. It's the dollar futures market. Okay, that's why we have volume on here. That's why I've got it here, because of the volume. And so that 94,795 is a little higher than the DXY, which is like 94.742 or something like that, I think. But in either case, you're looking for that swing high right there to get above as your first step toward confirming a possible macro bottom. Possible. So you want to get above that. This blue zone right here, this trading zone, it's actually this area right here. So if you were to kind of take this and go like that right there, the target based on that is up here at that 97.77 area. So that's just based on it. So, I mean, this is kind of the big picture here. If you can get a rally out of this, this green zone that we're in right here, then that should be bullish up through that level. So that's what I'm kind of looking there, big picture-wise. Oh, I actually did introduce you, Hank. Looking at Wyckoff was definitely a big bonus to my tool belt. You missed the flags and the wedges, though. Yeah, 2018 was a lot of flags and triangles and wedges. It was, wasn't it? Yeah. I was just joking about it, being the catalyst for that, but it looks like actually I did have something there. So that's good. I think most people that really want to learn to trade, that really want to find a way to make it make more sense, it really is all about that price action and volume. That said, it's also, more difficult than learning an indicator. It's not that it's really hard to learn. It's just it's nuanced, and you have to learn it correctly. Otherwise, you're one of the yahoos out there saying, oh, it just doesn't work, and really you just weren't doing it properly, right? So, yeah. So we'll see what happens here with this. We'll see if we can't get that rally back on up out of there. And, of course, if the dollar does continue rally on up, that's going to put downward price pressure on everything else. Again, we looked at the cubes here, how we've got that drop down. We can look at, let me see here. Let me see here. What are we looking at? Do I have the NASDAQ? Let me do the 4 newsletter. I'll do that. What else do we have here? We've got... we look at the S&P E-minis. I'm doing the newsletter one because it's a lot more, than than the really intricate Elliott wave count. This is a lot more. Here are the things we're majorly looking at. Here's the big picture. And so like the cubes here, see how you've got this ascending support and it breaks down through it on that volume and that gap down. Same thing happening here. Volume, large candle spread, breaks down, moves back up, gets rejected at that resistance, and gets a new lower low. Same idea here, breaks down, gets up, gets rejected at resistance, lower low. So, everything else is kind of following in with it as well. We've got 3 days now of kind of this sideways. We've got this elevated volume here, and we're kind of getting sideways. If we're looking at this, it's potential that, we could have a 1, 2, 3, 4, 5 here. So you get a rally back up, a wave 2 type thing. This is the daily, of course. Zoom on down here to the 1 hour. And there's your 1 hour right now, kind of finding resistance at that pivot, previous swing high. You know, 5 down right here, of course. And then right now, this looks like we've got 3 up. And so, you know, we'll see on that. We'll see maybe this one right here, 1, 2, 3, 4, 5 maybe. So it looks like we've got 3 up, maybe 5 down. And then 1, 2, 3 working out here. 1, 2, 3, 4, 5 maybe. As long as it doesn't break out above that swing high, we should see this then rally on or head on back down. But what you're going to want to see is a breakdown below the swing low right here at 42.6750 to kind of confirm that. And again, at that point, then you're looking for this target right here at the blue demand structure right around 40.41. And then secondary, you know, once it bounces there, it should come on down here to this. And you get a real reversal, you know, larger term reversal bounce here at that 38.63 level. But that, you know, if you're getting down here, that should just be a bounce, 3 waves up. And then, you know, this is a 1 down, 3 waves up is a 2, and then you've got a larger 3 coming in. So, yeah. Oh, yeah, no doubt. Definitely needs a lot more study. Yeah. I'm just glad, you know, Hank, man, I'm glad that you got into it. I'm glad that other people do as well. You know, that's my whole thing there. Again, you know, I do all these things, but at the end of the day, everything comes out of that price action volume relationship, right? So it always kind of excites me when other people are getting interested in that and they like that as well. If we do rally up above this level here, you know, again, you're going to want to see it. If you're bullish, you're going to need it to break out above this. If it can't get above this one up here, you're probably stuck. It's probably heading back down. So this is up here around that 44.72. So if it does continue to rally and it can't get above that area, you know, be looking for it to potentially head back down further. But I think, again, we may have this 5 down here, looking for 3 up. And if we're looking for 3 up, you know, 1, this could be 3 here, right? Maybe this is 5. Maybe it goes 1, 2, 3, 4, 5 here instead of 1, 2, 3, 4, 5. But if this is 5, then this will be 3, and then we'll, you know, 5, 3, 5. You know, as you're doing it, get those 3 up. But you'll have to get, you know, 5 up, 3 back, and then 5 up. And again, that's when we start looking at that higher target up here. So we've got to just see how it continues to play out. But if we're losing this swing low here, we're heading down there, and then, of course, down there, most likely on it. Oh, yeah, no doubt, man. Sitting up here and talking about it, oh, yeah. What I do with Discord, with our members, sure, yeah. It definitely helps. You know, guys, when you're out there, if you need to learn something or learn it better, teach it to people, guys. It forces you to pay more attention to what you're saying and to remember those things that you have to remember. So, yeah, definitely helps out a lot. You know, I'm just not that person. I mean, again, I've been doing this a very long time, but I'm not that person to just sit back and go, oh, well, that means I don't have to learn anything new, or I don't have to keep practicing or anything. You always have to. You always have to. Let me see here. Hank doesn't like the relative weakness of even the major alts. Looks like rotation to him. Yeah, we'll see what happens. Ethereum is pushing its way up as well. Litecoin, if you're talking about major alts, XRP are still, looking like Bitcoin, looking like they've completed a pullback and they're headed higher. So we'll see what happens with that. Again, we need that follow through. There are no guarantees in trading, of course. But that's why, again, I always update our members and let them know, where I'm looking at as far as potential, invalidation levels and whatnot. This is FTM here, USDT. It looks like right now that we've got 3 down and we've broken out above that. So a breakout above there should have it continue up, maybe about 2.99 on that initial short-term target. Let me see here. Yeah, so you've only pulled back just beyond that 23.6 there. This might end up being like a leading diagonal maybe. Maybe like a 1, 2, 3, 4, 5. It gets caught up potentially up here in this supply structure in the wick here. So you get your 1, you get your pullback to your 2, and it should get up. So yeah, I would expect that we'd probably maybe get up in this blue area, pull back down toward here, and get that breakout on up. It's possible this is a 1, 2, 3, 4, 5. So in that case, the pullback here then is they have 38.2 to 50% for wave 4. So again, 1, 2, 3, 4, and then that's where you get that 5 up there at the 2.99. So short-term trade, I mean, it would be a pretty good rally from 1.38 right now, right? Everybody always hating on Litecoin. Yeah, we'll see. It'll be interesting, Hank, to see which one of these ones that are all excited right now while euphoria is high, to see which one of those actually survive a bear market. Remember we had that during after 2017. There was all that hype about lots of projects there right in that last few quarters leading to the end of to the all-time high there in 2017. And then we basically didn't hear anything from them after that. It all just kind of died off. So we'll see what happens there. BNB was interesting. BNB, again, that was the one that was one of the ones I missed. I make no reason to lie to you guys. I miss them every once in a while. I missed that one when that came out just prior. I think it really started popping off probably Q4, I think. I think it came out, in Q3 in the summer of 2017, I believe. And then it really kind of took off after October, I think, along with everything else. And then it continued to rally all through 2018 as Bitcoin pulled back. And again, we saw that same kind of thing happen with Link when we had that pullback in 2019, the big dip down, that BitMEX thing, which saw Link continue to rise even though Bitcoin was pulling back and whatnot with all that. So, I mean, there's always some out there that'll, this is the one thing that you guys need to understand. Even if things happen like I think they are with the whole, economic situation and whatnot, and we head into a depression or whatever, you're still going to have some that are going to you're still going to have some stocks and things that are continuing to do well. It's not like absolutely everything goes down. That's all there is to it. At times, it'll seem like just about everything's going down. But there's always going to be money to be made along the way. And some of them are going to be great plays on good bounces along the way. Others will just not be overly traumatized by the reversal in the bear market. They'll continue to do well through the bear market. And so, if this does materialize, I'm going to be spending a lot of time with my members on which ones to look at in terms of stocks and, potentially cryptos and what's going on there. And of course, at the end of the day, guys, trade forex. Shoot. Forex, it don't matter what's going on. You've got money to be made up or down. It makes it easy, right? It makes it easy to short. It makes it easy to long. And for most people, there's no real emotional attachment to, whereas with crypto and legacy markets and metals and all this stuff, commodities, you're always looking for this rise, right? You're looking for the market to go right and up, right? But Forex is basically, whether it's years or whatever long, it's basically just one big range, right? And so these currencies flip-flop back and forth, who's stronger, who's less, and just within this range. So it takes that pressure of always having to buy in and getting upset when it goes the other way. It kind of takes that pressure off you with that. So just something to think about if you guys haven't thought about that. Again, I love Forex. It's great. It's a lot of fun. Let me see here. Let me kind of see what you do here. Tellurrider says, I'm still so green in Forex, but really enjoying it as another market. It's fantastic because, again, no matter what the rest of the economy, everything's doing, your dollar rate or your fiat rates, interest rates and everything, and their value is going to flip-flop back and forth. And so there's always possibilities to trade, especially shorter term, if that's your thing. That's the only market I really trade short term on is Forex. I mean, I'll get some short-term trades sometimes in stocks or, commodities or whatever, but most of the time, those are longer-term trades. Forex, though, and again, I do it because here in the U.S., one of the requirements to have your Forex profits treated as normal income rather than long or short-term gains is that you have to have the appearance that you are constantly trying to make profit in the market every day, basically. So you've got to make a few trades a day, more or less, on average. So I mean, I've got some longer term positions I put in there, but most of them are just these shorter term positions, just to nab, sometimes just a few pips. But that doesn't make a difference when you've got a large size, right? So if you're moving, a large number of units, that little move in Forex could turn out to be quite a large return. So, yeah, that's why I do that there. Can I define short term? I don't usually, I'm not usually out in 15 minutes. Short term usually means either a day or a few times within a day. The trade I'll make a few different trades within the day that they're open and closed in that day, or, just one trade in that day that's open and closed. Basically, it's a day or less, I guess, is what I'm trying to say for trading. That's the short term. Because otherwise, most of my trades are, days, weeks, months that I hold them, depending on what they are. Definitely much more swing trades, especially if I can get in on a low, on a bottom, like Naked. When we posted that one, that NAKD, and we were down there, we got it under 5 cents or around 5 cents. Again, I keep talking about that, went up to, $3 or whatever. But in that, when it moved, it moved pretty quickly, but it took a little bit for it to move. So it just kind of sat in the position until it did. And then, of course, really, really nice move up on that. So, yeah. I don't necessarily say, okay, that I have to have a trade done in so many minutes. Again, that kind of like saying I have to make so much in a day. I have to get so much % return every day. That locks your brain into thinking, okay, it has to be done that day. And if it, which means that, sometimes the market's just not a good market to trade. Some days it's just kind of, and you don't want to have that pressure on yourself to have to trade that day. And so, usually if you say I have to make so much percentage a day, and you're like, oh, if I only make 1% a day compounded, that gets me here this quick. Everybody's done that, right? The difficulty is making that 1% a day, because some days it's really just not even worth trying to make 1% in the market. And, but you'll feel forced to do it, and you'll take really bad trades and you'll lose money. And it does all that. So yeah. You thought I meant 1 minute scalp? Sometimes it happens that quickly, Mark. Sometimes it happens pretty quickly, maybe not a minute, but a few minutes. If I spot an opportunity that says, it looks like we could have a quick pop here for 5 or 10 pips or something, profit, yeah, I'll jump in there. Because 5 or 10 pips profit, on a small trade for me, be $500. If I can get that in, a minute or something, or a couple of minutes, I mean, that's silly not to take it. But, it's only when the market kind of shows that, we show something coming up on that. So, yeah. Yeah, natural gas, man. That thing rallying up there. I feel sorry for y'all over there in the UK, man. Having some trouble with that. Let me see here. Oh, where's my nat gas chart? My nat gas chart. Here we go. I do this update a couple of times a day for our members. For our Tier 2 and Tier 3 members. And so now we've got this move here. And so I was looking for a possible pullback here. So here's the thing. I was looking at this maybe as a leading diagonal here, potentially topping out around this area. But I would need to see it coming back pretty soon to get that wave 2. Right now, I've got this potential wave 5 target up here at about $7. But there is the possibility, as I told Discord, because this is an ABC thing here, that maybe this could be an ending diagonal. This could just be wave 5 ending. And I would be careful of that if we're breaking out above this wave 3 swing high here at about $6, almost $6.10. If we're breaking out above that without getting a decent pullback here, I would think that this might be an ending diagonal as wave 5. And so, right here on the 15-minute, we're back up and overbought here. Your 1 hour is topped out and overbought in Stochk RSI. You've got this, locally, you don't have bearish divergence here. But over time, it's much lower as you potentially make a higher high here. 4 hour, up here in overbought with the Stochk RSI. Up here in RSI, about to break out into overbought. Daily's the only one gives you a little bit of chance, but daily here, you see that you had this this bearish divergence, the hand in here, and pulled back. But now not so much. Now, the bullish thing I see potentially for natural gas is the fact that we're kind of moving in here. We tested the pivot here as support, rallying back up. So unless we fall down below this swing low here at $5.341, unless we drop below that, pivots wise here on the daily suggest that that it's bullish as we get that. But if we lose this swing low here, maybe we make it up here around this R1 pivot, then we pull back and then we drop below this, then things start getting kind of interesting. Again, for me, I've got that 5 coming up there. And that's a 5 off of the swing low down here in June of 2020. So 1, 2, 3, 4, where we're at in 5. 2, 3, 4, 5 coming up. Which means the pullback will be pretty decent if it is that right there. So yeah. Let me see here. If you spot an opportunity, the jokes are thick today. Forex depends on where you're at as far as what platform you should use. So good ones to use are I just completely lost it. Oanda. Sorry, that's the one I'm looking for. Oanda. Saxo's been around a long time. FXCM's been around a bit. Forex.com is another good one that you could potentially use as well. It kind of depends on where you're at. If you're outside the U.S., guys, I'm not even sure. You really want to stay away from your kind of shady guys, the ones that offer all this ridiculous, stupid leverage. because they're making their money on you getting in there and being unknowledgeable and overly, putting in too large a size and, and getting wiped out left and right continually. The spreads are there. What you want to look for is you want to look for small spreads if you can get them. Forex.com's got some of the better spreads usually. You can often get USD yen or Euro USD at 1 to 1.5 pips spread, which is significant because that's what you're paying up front. It's not like crypto where you pay, you pay a percentage to enter and a percentage to exit when you do. When you're trading Forex, you pay the spread. So you're paying right up front. So let's say you want to get in at, we'll just use I don't know. Let's say you're in the USD yen and you want to get in at 111, exactly, 111.00, right? Well, you have to pay that potentially 1 or 1.5 pip spread first. So your entry doesn't actually come, your entry's there. That's where you open at, but you start down 1.5 pips lower. And then when you exit, of course, you have that spread as well. But, it's not like these huge percentages. However long you ride that, all you pay is that spread when you get in and when you get out. So it's a lot less costly to trade Forex in terms of your trades than that. They kept calling you to upsell stuff at forex.com. Man, I don't know about that. I've never had them call me. So I don't know. Maybe that was something they were doing at the time. Hopefully they don't do that anymore. But, again, there's a lot of different Forex brokers out there. The thing you guys got to remember when you're trading Forex is you're not trading, unless you have significant size, you're likely just trading your broker. And a lot of people come off and go, oh, they're trading against you. They know where you're entering and exiting, so they're going to just cut you off. They're going to make sure you lose. No. What they do is they just provide liquidity for the other side of your trade. That's all it is. If a broker's numbers aren't, everybody in Forex should be right around the same, just like in crypto, right? If you're in with a Forex broker and they're obscenely off from the pricing, from the values of the same pair and other Forex brokers, do not go with that one. Stay away. They should all be about the same. But what they do is you trade internally against them. But if you have a significant enough size, legitimate brokers will give you access to the main pipelines, basically. And so you'll actually get in there where you're trading with the actual large market participants. Usually that means you've got to have, 50, 100 grand in your account to do something like that. But don't think that because you're trading, just locally with the broker there, that they're trying to scam you out of because they know where you're entering, where you're exiting. Because they don't do that. I mean, they know, but they don't do that. They're just providing you liquidity for the other side. Trust me, you don't need it as a new trader. You don't need any help losing money, right? They'll do that. So, no worries on that. But that is the way, that is just a heads up. So in case you hear about it after you get started and you think, oh my gosh, they're just taking my money. No, they're not. All right. Oh yeah, that's right. You're European. Maybe more aggressive toward out of the U.S. Because I believe they're based there in New Jersey, I believe, here in the U.S. So yeah, maybe it is just more going on over there. Like I said, hopefully not anymore. If it was, yeah, hopefully not anymore. Yeah. Let's see here. Diego mentioning the head and shoulders there on the Euro Aussie. Oh man, yeah. Let me see here. We'll see if I look at that real quick. As I said, guys, don't forget Tier 3. This week I'm going to start adding in short squeeze notification for you guys. In other words, stocks that are trending pretty high, that are meeting a lot of the tickets that said they're probably, going to see a short squeeze or some sort for y'all. We're looking at this right here. Well, let me zoom out here a bit. Let's zoom out the daily. So this is the head and shoulders we're talking about. Oops, can't do it. And as you can see, if this head and shoulders is legit, then they've already broken down. And if it is legit, then you would be looking at a target here. Target here. Of right there around 1.53840. So yeah, quite possibly there. If we look at this, I think it has a good reason, likelihood to be, because we're only 3 waves down as we broke below the swing low, right? And so, again, you'd be looking at least, 2 more waves, right? 1 up and 1 down. So this kind of gives you this, so I can get this right here. There we go. So locally off here, actually it may be a flat correction right there. So kind of hitting that, look at hitting that 1618 and finding some support at the moment. So you rally back up and then break down. My problem with that is then wave 2 is likely then to kick back up into it, if that's the case there. And then you don't want to see that. If it's a head and shoulders, if it's a legit head and shoulders, price shouldn't be breaking back up into it. And see, that 38.2 is going to be all the way up here. So even at the 1, 2, 3, 4. Let me zoom in a little bit here. So you get 1, 2. Let me see here. I think this is 1, 2. Because this looks like a pretty clear 3 up here. And so 1, 2, 3, 4, 5, leading diagonal. ABC up. And so this makes a little bit more sense. This gives you this wave 3 down here. So you have like a 1, 2, and then a 1, 2. So we should see it extending lower then. So I would think if this is a 1, 2 here, it gives us a 5 down here, at least at 1.568. And then that should be then this 1, 2, 3 here. See, that makes more sense now, because now what you have then is if this is 3, if this is 1, 2, 3, you get your 4, you get your 5. Let's see here. And you potentially get your 38.2 there. Let's get your wave 5 down here about 1.558. And then we look at, okay, so there's 5 down. That's a 1, right? So 1, 2. Actually, this will be 3 here. See, and then this makes a lot more sense because now you're not breaking into the head and shoulders, but you're continuing lower as you should be expected to if that is a head and shoulders pattern there. So 1, 2, that says we're down here. 2, 6, 1, 8. Common wave 3 relationship, right? So that'll get you that 3 there. So 1, 2, 3. And then, let's see. There, gives you a 38, it should give you a 38.2 right below the other wave 4. Yeah, right here, see? If it does pull that whole thing there. And then, of course, looking for that wave 5. And this is why, you get down here again. Then you get down here at this 1.544 kind of area. And now you go, okay, so now we're far enough down that likely, if this is a 1, 2 is not going to break up into that. Say you get your 50% prior to that. Your 61.8 is right there at that edge. So you get a 1, 2, or an A, B, either way you want to look at it. And by the way, this also almost gets you to the pattern target down here. So I can see some overextensions leading us down toward this area. So yeah. So that, again, looks like it's doing some good work on down. We'll see if we can get it to continue falling. Your daily, even though you're in oversold down here on the Stochch RSI, RSI itself still has a while to go down here. We're only sitting there right there around 38 right now. You got to get below 30 to get oversold. So definitely room there to continue that going down if we're going to do that. Let me see here. Yeah, you don't need any help losing money, Data. That's right. If you're a new trader, it is what it is, man. You're going to make the mistakes you're going to make. The goal is hopefully to recognize that you're making those mistakes. And then it's not just enough to recognize it, but then it's, you've got to get in there and convince yourself that you need to do something differently. Yeah. So, let me kind of catch up with you guys here. I'm a big fish without saying, Tell Your Writer says. Oh, I don't know about that. I trade. I probably trade a larger size than most, or at least most of y'all. I've just, some of our members actually have quite a big size that they're trading with. Don't think that everybody in TWC, guys, is just small fish. We've got some pretty large accounts that trade, that are members with us and they trade. So yeah. But again, I don't, the good thing about where I'm at this point is I don't have to worry about making $1 million tomorrow. So it takes a lot of that FOMO and stuff that most people normally feel off me. I'm not worried if I miss something. It's not like, oh gosh, if I miss this trade, I can't pay rent or something like that, It's definitely nothing like that. So, it's one of those points that you guys should strive for as traders, to get to that point where because once you get to that point where you've got enough and everything's fine, you can pay whatever you want and pretty much buy what you want more or less, when you want it. It takes so much of that pressure that you feel right now as new traders off you. Now the pressure that you feel is what you're putting on yourself, unfortunately, but it takes a lot of that off. And then, so you don't feel like you have to jump in just because price is moving. You don't feel like, oh God, if I don't stay up until all hours of the morning and all hours of the next day, I might miss this move, and then where am I at now? You don't worry about that. Trading is just what you do during the day, or during your trading time, whether it's day or night or whatever. And then, at the end of the day, it's over with, right? So, a lot of people comment to me, many times that I'm always so calm no matter what the market's doing, and that's why. Because I'm not anxious to get in immediately. I'm willing to give the market a little time to let me know what it's doing. But that, not only is that just a product of just practice and time, experience, but it's, I'm not going to lie, not having to, to be in the trade, not having to be in it adds a lot to the ability that I don't have to worry about it so much if I were to miss something because I'm waiting. So I would hope that you guys all strive to get to that point. And for most of y'all, it's not really far off. It's not as far off as you think it is. Again, you'll notice it when you get to that point where your bills aren't such a big deal anymore. Not really so worried about it. Not really thinking about it. You're always just paying off your credit cards every month rather than letting them accrue interest. Stuff like that. And you don't give it 2-second thoughts about it. Yeah, you'll get to that point. Yeah. As long as you're doing the things that you need to do correctly, guys. I can't do it for you, and it's not going to happen on its own. It takes you learning how to do it correctly and then practicing it correctly. It takes time, guys. It absolutely takes time. Okay? Let me kind of catching you here. Catch up with you guys. Does having other income streams besides trading made a big difference psychologically to your trading? Well, it would if I wasn't at the point I'm already at. Yeah, sure. this is the big thing I think that most new traders miss is this, they go in with all this money they shouldn't be playing around with into it. And it's because they're going to lose what they're going to lose it because they don't know what they're doing yet. Right. And so they lose rent money or grocery money or whatever. But yeah, you should have some kind, if you can have some kind of regular income coming in while you're, especially in the beginning when you're learning how to trade, it makes a world of difference. It makes a world of difference. Again, the same idea what I was just saying there. It kind of takes some of that stress of having to be in a trade off you. I keep telling you guys, the most difficult person that you have to deal with as a trader is yourself. You impose all these things on yourself that cause you a lot of the heartache, a lot of the stress that you get. So yeah, if you've got either a stream of income coming, or if you've got a pool of money just sitting there, and basically the idea is that you don't have to worry about your bills. If you're at that point, yeah, trading's a lot easier to learn. Now, you're still going to be subject to FOMO and everything at first until you get a handle on it and, really take to heart these things I say and recognize them, and then you can do something about them. You're still going to be subject to this FOMO, whatever, but it won't be anywhere near as great for most people as it is if they don't have those bills paid and everything without an issue. Yeah. Let me see here. So, yeah, I'll have to see about giving Common Man if he show up regularly again. He started to lately. I can give him a wrench. Yeah, so as far as silver goes, same chart, guys. This is still what I'm looking at, possibly, right? So we get this rejection right here at the daily pivot. The daily is almost topped out and overbought. And so if we get this, this rejection here, and, we fall back down below the swing low, that kind of keeps this chart in play. Now, that said, we do... See, again, I tell you, if it's reaccumulation or accumulation, what you expect to see is something like this as you're in the range, right? And then as things kick up, you expect to see volume pick up. But what we have here is we have these continual volume spikes out here, all the way through the range so far. Now, I'm watching this area here, and we're not having spikes so much at the top. Well, I guess we are. But there's bigger ones coming at the bottom so far. So I'm watching this to see, normally we're going to look for volume to continue to expand through this. That's why I'm interested in what's going on here. If we get this breakdown below here, I would expect it to be on large volume, large candle spread. I expect to see volume kind of doing this thing as it continues to come down here, getting larger as it does. And that will tell me, okay, well, this is probably correct. If we get a rally up out of here, things can get kind of interesting. But it doesn't, you've got a long way to move up here to kind of say, okay, well, we're definitely, this is some kind of reaccumulation. We're heading higher there. I continue to remain concerned about this large spike, the largest spike we've had in this range other than right here as we dropped is at the top. So the two largest by far volumes we've had are at the tops here. And that's troublesome to me as far as this being reaccumulation. That's troublesome. So yeah, so I want to see here how this reacts down here. I mean, there is a count, again, we've talked about there's a count that says, okay, we go up higher here. But, we want to see if it does rally, we want to see how it handles this area. But again, if we're getting rejected in this area and it comes on drops below here, I'm looking for higher volume, looking for volume to continue to expand, and larger candle spreads coming on down. And if we get that, then that's that breakdown through the ice here. Remember, that ice is just your support right here, right? So the breakdown through that ice, through that demand, is where you should see that large volume, large candle spreads, bang, down through that. So does it happen here? Do we get this rejection at the pivot and then the fall down through? Because that opens up, again, this much larger count here. So we'll have to see what happens in this area. So, yeah. I was just giving you a hard time about Common Man. You mean you're not independently wealthy yet? Come on, man. What's this working thing? Let me see here. Yeah, as Mark's saying there, man, some of the biggest issue, the real big issue traders in general have is emotion. Emotion causes you to be impatient, which causes you to take trades you shouldn't be taking, which causes you not to wait for confirmations, and so these things happen, right? And they're difficult to deal with. I would never say it's easy, guys. It's definitely not easy to deal with it. Oh, by the way, this one coming down here, guys, this could be an A, a B, and a C finishing out here. Just to say. Again, you get the 5 up here. I mean, I would have to adjust the count here on that. But, we can zoom out here a little bit more. And this is kind of what I'm looking at, big chart-wise, from the 70s here. 1, 2, 3, 4, 5. And then we have potentially a 1, 2 coming out of here. So we do have this higher volume node down here at around 7 to 750 in that area, which would be a good potential target there. A little bit of 1 here at 9. But this is that big chart. This is that 1, 2, 1, potentially 2. I like the count better as an A, B here, but it is, I think we can potentially get an A, B, C here. And so that would be that whole idea that maybe we head up higher from there. But it's got to do some work locally there, as I was talking about, to really kind of say that. As you can see here on the weekly, we're below the weekly pivot. That S1 pivot on the weekly, which means this pivot sits good through the end of the year, is right there around 15.40. We do have, we haven't quite fell down further yet here. We've got potential bullish divergence between the week of August 16th and September 13th. Let's see if that comes out of the same one here. But see, that low is not this low. This is the previous week. So I have a hard time with that being a divergence there, because it's off it's off these inside right here. See, it's off this one. Oops. I'll just go ahead and do this. And this one right here. It's not the actual lows in price. It's off those interior lows. So I wouldn't look at that as divergence in that area. But you definitely have to rally and remain above. Rally impulsively and remain above that weekly pivot to kind of give it some bullishness there. The weekly, monthly is about the same here. And again, all it is this area out here, this resistance area, support area here. Now the monthly, the monthly is just beginning. So this month it could cross bullishly down here and oversold on Stochastic RSI. But heck, guys, we're only 5 days into the month, so nothing to really glean out of that really well. There is a lot of potential downside here for the monthly if price wanted to continue lower. So, again, larger time frames, they are kind of saying whatever they're saying there, right? But they are larger. They're the weekly, they're the monthly. So, we've got to give them time to play out. So until then, watching a slightly less large time frame, in between, moving in sideways between the S1 and the pivot here on the daily, rallying up to the pivot. The question is, do we get rejected? But here's the thing. Even if we break out above it, it's not enough. We've got to get above this swing high right here, this 23.15. We've got to close above that and then remain above the pivot. If we get above the pivot but remain below that, we'll fall back in. If we put this to candles, daily supply structure right here. So again, you could get the rally above the pivot and get rejected in that daily supply there. Send it back down. It is possible. I don't know if there's anything I really else say about that right now. Again, it's going to depend what happens in here if it continues to rally up. But if it does drop down below that swing low, I think we're headed lower here toward this 18 and 18.415 kind of area. Hank, have a good week, man. Enjoy, hotel hopping, whatever. Let me see here. If different income streams makes it easier for the psychology of a trader. Yes, like I said, yeah. That's what I was answering, Mark. Sorry if I wasn't clear. Yeah, having different income streams means you don't have to depend on what you make as a trader, which means some of that pressure is taken off you about feeling like you have to FOMO in and you have to be in and, oh my gosh, I'm going to miss that trade. And if I miss that trade, then what? It's over. My life's ended. I missed Bitcoin's, $5,000 run or something. That's how most new traders think of it. But yeah, if you've got income coming in, so your bills are taken care of, then yeah, it makes it a lot easier to take that kind of stress off you as far as that goes. But it's still going to be, especially if you're new, it's still going to mean that you're going to have to work on it. It's not like all of a sudden you're not going to be, oh, everybody else is FOMOing, I'm just fine. That doesn't happen. Unfortunately, I wish it was that easy. Again, trading is simple. It's not easy, but it's not easy. What I mean by that is that it's not easy in terms of dealing with your psychology and your own emotion. That's what I'm talking about. Really, price is just moving between liquidity, guys. So, yeah. Corey B, hey, I hope so. I hope so, man. I hope every one of y'all become better traders than I've ever been. It's the same thing with my son. I raise him, not that I'm raising y'all, but, I as a parent, my hope is that he will become better at everything than I ever was. And I'm pretty great at a few things. But if you guys are listening in and joining us at TWC and all that, my hopes are you become much better than me. I would be, it would be sad to me if nobody ever became better than what I do. The whole reason I'm teaching here is so that you can learn to be better, so that you can learn to make this money. Yeah. So yeah, I hope so, you guys. I hope so. Common Man says, back in the fall of 2019, I was working full-time, was buying Bitcoin on a consistent basis, planning to invest. I have trading view charts where I basically called the bottom. Anyway, thanks for listening to my sob story. Oh, okay, there's more to it. Before COVID, you had a small business that provided the extracurricular programs to local elementary schools, taught chess. Since I went to a different school every day, I'm the last to come back. Financially, that's been really rough and has been eroded a lot of my savings. Worked part-time as a painter to make some extra money. The last 2 years have been very disappointing. Yeah, man, it's been tough, man. It's been tough. I feel for you. Not just in your area, but everywhere. Everything the government did when COVID came in was just completely rough on just everybody in general. So, yeah, man. Hopefully things will kick back in. But, the goal is, if you guys find yourself in that situation, is not to try and make your $1 million lifestyle happen overnight. We can often be, with our own emotions, we can force ourselves into trying to do things quicker than what we should. You will forever get the best results out of trading at the beginning, especially if at the beginning you're taking it slow. You're not trying to become a millionaire, yesterday, overnight. If you can take your time moving it, that means you have less chance of FOMOing in, less chance of making wrong choices. You're going to make wrong choices. But that risk management is so important, guys. All right? Yeah, I think we're heading down with gold as well, Corey. Sure. Yeah, I've got to get going here in a minute. Let me throw up gold here real quick. My gold target for right now still remains sub 1,000. We'll see if we get it. Yeah, it definitely sits there right now. And of course, silver, getting below $10. Let me zoom out here a bit to my bigger chart. So yeah, as you can see here, I've got this potentially. These are all extra off to the side here. I've got a wave circle 3 here at 14,456.80. And so, that may be wave circle 3 off of this larger 3, which I'll just have to change those things there. Or this is an A, B, and then we're working on C down here. But again, we'll see. We've got the major support in that 1,500 area. Let me kind of zoom this out here a bit. The weekly here. See this area? Well, we have it there on this 1,500 area. And so if we lose that, that's that resistance right here and the support over here from 2011, 2011. If we lose that, there's little reason why we shouldn't end up down here around 1,300 anyway. I'm still looking at this right now as a ABC, and then A, B is a triangle, and C up here. And then, potentially dropping down here, maybe toward this higher volume node here at 930, maybe somewhere around there. And it just gives us a flat correction. A, B, C for heading up. So yeah. Yeah, no, I do. Like I said, and that's only if we get this here. We were long over here, guys. I've been in business with TWC since September of 2017. And so right around this area here, I sent an update to Discord to our members. Well, we weren't in Discord at the time. We had a different thing we were doing. But I said, I saw gold long toward that 2,000 level. I think it was like around 1850 or so. It was right below. It was right before this. Because I was looking at the possibility of 5 down, 3 up, and then 5 more down. And then, that was a great run there from 2018 up until 2020. We continued up to a new high here. So I looked at the count again. I've got an ABC, and then, like I said, an A. Triangle here is B, and then C up here. But that would just give us a flat correction here, an expanded kind of flat correction, which means that price would have to come down below here. Now, this could still be the count here, and we could have a running flat, which means at that point you're looking for price to retrace 61.8 or so of A here. So 61.8 gets you this 1317. So again, we could see this because, if this is a flat, well, so I've got WXY as A here, and then I have WXYXZ as B, okay? And then we'd have C coming down, right? But again, if this is a running flat, we should expect price to get down here around 1,300, 61.8 retracement of wave A here, and then, to finish wave C, and then we'd go up. But otherwise, we've got an expanded flat because B wave would be above, come down here. This one just seems easiest to count as a triangle. And so if it's a triangle, then it can't be a wave 2. It has to be something else. So that's where we get this whole idea that maybe this is corrective off here. And so this kind of drop down here would work well with the idea that maybe the market's topping is going to come crashing down because everything takes a hit at first. And before the market ends up bottoming, at the end of the bear market, gold, rallies back up. So that would be that there. But anyway, all right, guys, listen, I'm over by 10 minutes here, so I'm going to get going. As always, had a great time. Thank you so much, guys, for your questions and your, and your discussions and everything. I will never purport to, to absolutely know exactly what's going on. Anybody that does that and says they're a trader is lying to you, either about being a trader or about their guarantees. They're probably, if they really believe what they're guaranteeing you, they're probably brand new to trading. Understand that. They haven't been doing it for years and years successfully. Because the one thing you understand as you do that for years and years successfully is that there are no guarantees in trading, guys. There are absolutely no guarantees in trading because we're only human. We can't possibly know the outcome of every decision and every decision of every decision. So you get this decision tree, decision branches on this tree, right? Where you've got an A-B decision and you go this way, and then you got A-B again, you go that way, you got A-B again. And you don't know all these other decisions. You're inherently always going to be behind the 8 ball. That's why risk management is so important, okay? I hope you guys understand that. I hope you guys have a great week. You trade safe. Hopefully you guys will join us at howtotradetowin.com. I'd love to have you there. If you haven't subscribed yet to the Market Breakdown, be sure to do that. I put that link earlier in the stream. And that's my weekly newsletter. It goes out free to you guys. Like I said, Tier 3 members, you're about to get some added features. You're about to get a constantly updated list of stocks that are most likely to be short squeezed. And so I'll start posting that for you guys. And other stuff still to come. I really appreciate you guys checking in. As always, I'll be back on Friday, 11 a.m. Central Standard Time. Hope to see you there. Until then, as I said, remember the only thing you control in the market is how much you lose. That's it. All right? So take that risk management seriously. Take care, everybody.